Today, I want to talk to you about three stocks that I think represent some of the best opportunities in the Canadian stock market. They have really cheap valuations. They have huge total return potential, and they have a great dividend that they're paying out. Best part is these three stocks are all in the Canadian oil and gas space. And because of that, they have been overlooked by investors for the last little while. And they're at a turning point where headwinds are becoming tailwinds. The challenges of the now are going to become the opportunities of the future, and investors can make a huge amount of profit. To start off, we're going to talk about ARC Resources here, because I think these are one of the best examples of an overlooked company. And I'm guilty of this too. I've overlooked ARC for some of its bigger peers in the past. I've overlooked it for some of the most interesting storylines, more of the volatile names. But these guys are one of the best producers of natural gas. They're probably one of the best businesses to own in general because of their mix of condensates and natural gas. They have some huge acquisitions they've done recently. They've had some growth that they've been going through. And the problem with them really has been how cheap they've gotten. I mean, look at it right now. This is a $15 billion company. We're looking at a 10 PE, 9 forward PE. And while PE is far from the best way to value a commodities company like this, it does show you just how cheap the company is. If I show you down here, I got a price chart for the last 6 months. We're down 11% in 6 months. So since the spring of this year, down 11%. And the storyline here is pretty much universal across natural gas, but it's hit ARC really hard. It's all about that overproduction in anticipation of LNG Canada. Now, if you haven't heard the story, just about everybody was excited when LNG Canada was going to come online. And that excitement led to increases in production because we were expecting that this added demand was going to push up the pricing, and we would see AECO prices closer, maybe not in line with, but closer to what you can see in the general North American market. Instead, what we saw was a brutal reminder of why natural gas prices are so volatile. It all has to do with seasonal weather changes. The summer this year just didn't demand the same amount of natural gas that we had expected. And so we had all this inventory built up, and then all of a sudden utilities weren't demanding the same stuff. Demand dropped. Of course, the price dropped with it. Now, LNG Canada has been a success. They are shipping off a huge amount of LNG. They're going to continue to do that for the future. But short term, things are bad, like really bad. Thing is, if short term things are bad, stock prices are down. But we all know that this is all seasonal, and summer is now over. We're going into October. Winter is coming, not to steal the line, but winter is coming pretty quick. And there's more and more LNG demand across all of North America coming online in the next little bit. You can see how maybe we're going to see a crazy rebound. Now, if you don't want to take my word for it, what about the Alberta Energy Regulator? Because these guys are predicting some insane stuff. If you look at the different projections they got on here, right now the price is not even at where they model it. It's actually down almost to zero right this moment. People will almost pay you. In fact, some days they have been paying for others to store the stuff. And next year, they expect the price to be as high as $6 per gigajoule. That's insane. If I told you right now that this company could 6x their profitability in the next 6 months, and I'm trading it at a 10 PE, you would be jumping to buy shares. But because it's in this natural gas space, this Canadian space, people are ignoring it. People are overlooking it. And so the opportunity here is really all about that rebound. And I think that rebound is going to take effect. You know, let's be conservative. Let's say sometime in the next year, that rebound is going to take effect, right? Because even then, if winter isn't great, maybe summer will be, or if winter just removes some of the excess inventory, summer then, draws on new demand. As these new LNG products come online in the States and in Mexico, all of a sudden it's going to impact the overall industry. And best part, US suppliers of natural gas, when the price started to drop, they started to cut rigs because their prices their cost, I should say, on producing the stuff is higher. So they can't afford to. So basically they had to cut rigs, which meant that all of this production that, we had in excess, maybe it's not as bad right now, but long term, where's that demand going to go? Right? Like there's a huge storyline here. There's a huge rebound story. I'm really excited. Guys like Eric Nuttall are already on BNN talking about it. So the opportunity is not going to last long, right? The guys like that, he moves quick, right? Any investor that's following him along, you better be ready to make quarterly decisions here. So it could be the next couple of months that we see the prices on these stocks start to rebound. And if they do, you can expect them to rebound hard. If you look at where that $6 range is, that is higher than we even saw in 2022. We had all these structural shocks to the natural gas market. Like there is going to be a huge reckoning coming for these stocks. These guys are going to be in a great position. You want that short term? You want to buy into something that's like just as cheap as possible right now. And yet it has this like great fundamental business. It's been expanding over the last little bit. It's in a great position, to be honest with you. ARC is probably your play. But what if you're looking at the longer term, right? What if you're thinking about, LNG is going to keep growing. Maybe I want to play that trend. AI data centers are going to keep growing. Maybe I want to play that trend. Well, that's where stock number 2 comes in. Stock number 2 today is Tourmaline. These guys, man, I'm so bullish on these guys that people on the channel have been asking me, are you being paid? And I'm not. I'm just a shareholder, but I think these are a really, really interesting, set of assets here at Tourmaline. And really what they do, they're name brand Canadian natural gas. These guys are the big dog in that natural gas forward money space. They're a $25 billion Canadian company, 24 and a bit, but and that is significantly bigger than ARC, but that doesn't put them even on the same world as some of the biggest producers on earth. But what they do have is some of the best assets, and they have some seriously long-term reserve life. They have the ability to grow production a huge amount. And so they are the ones that I think are going to benefit the most from the long-term demand drivers of Canadian LNG. Now, of course, we talked about LNG Canada phase 1 came online already this year, but there's 2 other big catalysts coming in the next little bit. First one here is siliciums. And this is the thing that went way under the radar. Like, if you're not interested in this space, you didn't read about it. And I bet you money there's folks on Bay Street who don't even know what happened. This is the second biggest private investment in Canadian history. It is an indigenous-led LNG facility on the north coast of BC. It's got a whole new pipeline bringing natural gas to it. It is a huge deal for the industry. It's going to drive long-term production growth, long-term demand growth. It is a huge deal. And yet it's kind of a, under the radar story. We saw some approvals go through, and that made headlines for about a day, but this is going to move markets. It's going to move the needle on this stuff. And it's far from the only project. We've got things like Cedar LNG that are happening, wood fiber LNG. We've got all of these LNG projects here in Canada, and that's not even considering the American ones. Americans are expected to double, triple their LNG production in the next little bit. And by little bit, I mean like 4 or 5 years. Mexico is coming online with some new LNG projects. Like, North America is going to be producing so much LNG. And you could argue, oh, maybe there's going to be a glut of LNG on the planet, but so many different parts of the world are starting to use this as not just a transition fuel, but a full-time fuel, natural gas. And so if we can continue to produce, we're going to be in demand for a long time. And the one thing that these long-term, utilities around the world that are looking to use this as a longer-term resource, not just a 5-year resource, not just a 10-year resource, 15, 20, 25 years, they're looking for contracts with companies that can continue to produce until then. Tourmaline is on the table for all these contracts. We've seen them get a couple. We're going to see them get even more as more projects go through. And as US shale starts to decline, and eventually the natural gas story there starts to decline too, which will happen sort of later in the cycle, there's a story there as well. So longer term, if you're looking for that, you're looking at Tourmaline. But the current projects or the confirmed projects aren't the only thing that excite me about Tourmaline and their production capabilities. The second storyline here is the potential projects. And I'm going to use LNG Canada phase 2 as my example here because, well, it has been announced kind of by the federal government. Obviously, it's not being built just yet. It's not done yet. The story with these new projects is the potential. These guys are able, Tourmaline is able to continue to produce a huge amount of natural gas, and they're going to be in demand for a long period of time. So things like LNG Canada phase 2 are going to turn to Tourmaline. Things like the potential east-west natural gas pipeline, things like the potential Port of Churchill LNG facility are going to turn to Tourmaline. And all of these projects could continue to massively ramp up the production runway for this company. The future for them is constantly expanding. And so if you're looking for a longer term LNG opportunity, I think Tourmaline is there. I think if you're looking at that potential for Canadian natural gas to become an in-demand resource that's being shipped around the world, and you believe that we can get these infrastructure projects done with the long-term opportunities there, Tourmaline is probably the name for you, right? You're going to get that same bump as ARC, right? They're a slightly higher price. I think they're at about 15 P, so they're not quite as cheap. So you might not see the same kind of dramatic boomerang, I'm going to call it, or slingshot effect that you've seen with ARC, but you're going to see a pretty huge jump. And then it's the long-term sustained growth that I'm really interested in. And that's why I own so many shares of this company, because that's exactly the kind of shares, exactly the kind of time frame, exactly the kind of stock I want to own in this space. But it's not the only one. Because if you're talking really long term, well, then you have to talk about our third name here. The third name on the list is not going to surprise anybody who's watched the channel. It's Canadian Natural Resources, ticker symbol CNQ. This is my personal biggest position in Canadian oil and gas. I own, for me, it's a huge amount of shares. And just, I love the company. I really do love the company. What they are is the oil sands king. Remember, we just talked about a $15 billion and then a $25 billion company. These guys are $95 billion. The scale here is just a different universe to the rest of these Canadian companies. They're just so big. And what they offer is that super long-term opportunity and an oil first opportunity. And while some investors are going to be turned off by that, especially guys like Eric Nuttall who are looking at those shorter term timeframes, if you're like me and you're the kind of guy who's going to put money away and sit on it for, if not years, decades, well, the opportunity for this nice slow cycle that we're in with oil is huge. Because over the last couple of years, we've seen, these optimistic peak oil demand in 2025, 2030, projections get pushed way out. We're talking 2050 plus. And that means that demand is going to continue to grow for that period of time. Now we're looking at 160 million barrels a day, if not more. So another 10, 15 million barrels a day more demand every single day in the next 10 years than we expected. And the most important thing, guys like Sankey Research will tell you this all the time, there has been a structural underinvestment in exploration of oil production facilities, oil producing assets around the world. There just has been. OPEC, which had this, oh man, they've got this spare capacity that could kill everybody, right? It's going to destroy the whole industry. They're going to drop the oil price down to 30 and we're all doomed. I mean, they've been raising their production quotas and production isn't there. Because a lot of those OPEC producing nations, not Saudi, not UAE, those guys have the spare production for sure. But a lot of the others, they actually didn't, because they've been cheating the whole time, just thinking to themselves like, oh, I got to get this out of here because I'm worried about these short-term oil demand cap forecasts. These focus groups saying that things are going to end in the next little bit. I got to get this resource out. I got to make the money. So there's not that growth there. South America, we do have some new projects coming online, but it's not going to be game changing, and it's not going to be game changing for long. And then finally, the coup d'etat, the biggest thing, it's the US shale oil twilight. And I keep saying that word twilight, and I keep talking about US shale, but really the story here is about US shale declining. If you hadn't heard this story, basically the idea is the US shale is the short reserve life, high sort of capital intensity business. You got to keep investing every, let's say 18 months. You got to drill a new well, you got to invest in. And so it takes a lot of money. And when the oil price drops, as it has recently, well, you go into what they call the death zone, where you can't afford to drill the next well. So for every 2 wells you have, you drill one. And then you see how that story can play out, right? The cash flows aren't there. And then, all of a sudden you're trying to finance all this stuff, and it's just a huge challenge. And while that worked out the first time that OPEC tried to put the squeeze on US shale, now the geology is different, and the Permian just isn't young anymore. We've exploited the highest quality resource, and now the stuff you're going to get out is going to be more expensive. And while that doesn't mean that US production is going to fall off a cliff, it does mean that it's not going to be able to grow to meet demand growth over the next decade. So where are companies going to turn? Companies with a huge amount of capital that are looking for abilities to have a huge amount of oil production and natural gas production over the next couple of years, that are looking for investable assets that could last for decades. Oil sands. It's simple. Oil sands are going to be the asset of the next generation of oil companies. It is going to be the thing that these companies need to continue producing oil up until this peak oil forecast, which is now, again, 25 plus years away. And so companies like C&Q that own a wealth of oil sands resources are going to see their stocks materially changed. And it's going to happen sometime in the next year. And it'll happen in slow starts, right? First, it'll be when the official IEA projection of peak oil comes out, and all of a sudden you see peak oil being pushed out, right? That's going to unlock some investment. Then it's going to happen when you start to see the oil price start to run up, right? After the low we're looking at over the next 6 months, right? Then the oil price starts to run up. All of a sudden, okay. Then it's going to be the next milestone, the next catalyst, the next thing. And it'll be death by 1,000 cuts. And by the time the decade is over, this thing could be double or triple its current price. By the time the 2030s are over, this could be a $200, $300 billion market cap company producing a huge amount of money. Like, this could be a huge company. And the worst case scenario, let's say that we don't see any of that growth and they just coast. Well, they're going to return to you a great dividend. They're going to return to you a huge amount of production per share as they buy back shares. And you're going to be just rewarded handsomely for sitting on your hands. And that's the kind of stock that I want to own over the long term. Because while the short-term returns of LNG are going to be great, that natural gas opportunity as we start to see the AI demand come on, great. So those Tourmaline and ARCs, those are awesome companies to own. C&Q is for the guys that really, really want to sit on their hands. The guys that don't want to look at their portfolio until 2027. If you're that kind of investor, I think this might be the stock for you. So Let me know what you think of my picks. If you like them, let me know. If you don't like them, if you have others that you prefer. I know I can hear a couple of you guys naming some names that I didn't mention, and I can't, right? If I talked about every single company I liked in the industry, this video would be an hour and a half long, and nobody wants that. But I think they're interesting. I really think they're underappreciated, right? I don't see enough interest in this space. It doesn't reflect the real turning point we're at. We're at the point where the cycle is about to turn, and man, there's about to be some money made, right? We're going to have, lots more videos talking about all the different storylines in here. We're going to talk about these companies over the next little bit, and I really am interested to see where they go, right? See if the projections are right or wrong, if we see some other big catalysts coming along, moving the market. And of course, I'll let you know anytime that stuff happens. If you like what we do here, please do subscribe to the channel. If you like this kind of video, please do like it. And as always, hope I see you in the next one.